Hey everyone, it's Mike from Orderflows and welcome back to my channel. I'm glad you could join me for today's video where I'll be talking about value areas. And quickly before we jump in, just be sure you hit subscribe if you want to see more videos like this, and be sure to leave your comments because today's video on value areas is the direct result of several comments that I got on earlier videos about order flow and value areas. So let's just really quick take a look at these comments. So S. Val says, thanks for the content, Mike. I appreciate your time. Any videos containing new setups or value areas would be appreciated. Henry III asks, do you have a percentage for value area, like 60% or 70%? And Nicholas says, we want to see different ways you see value areas, Mike. So let's take a look at value and how you could use it in your trading. Now, just really quickly, right? Most traders are familiar with value areas because especially order flow traders, right? They've studied already market profile, volume profile. Now, the inventor of market profile, Peter Stottlemyre, basically over all his research over decades of watching the market, trading the market, understanding the market, he sort of settled on 70% of the volume, gave the optimal balance of relevance without being too restrictive. Now, the 70% represents the prices where the majority of trading activity and market agreement is happening, right? People trade the market, not necessarily for speculation. The majority of big traders, they trade it because, they have a reason, right? And the reason is, sometimes they need to hedge something, and, or in the case of things like commodities, they actually need the underlying commodity. And as a result, that generates support and resistance, right? So knowing where the majority of volume is trading, right, sort of gives you balance in the market, right? And there is, so sort of going back to the question, do I have a certain percentage that I like? I stick with 70%. There are some purists out there that think that 68%, these statisticians say, well, 68% is really the true measure that you should be using because that represents sort of the mean and one standard deviation on the other side. And when I talk about the mean, it's volume tends to be normally distributed across prices in liquid markets, and the mean and one standard deviation on either side of that mean sort of captures around 70%, or they'll say 68% in a normal distribution. But I'm going to sort of just show you there is generally minute differences, obviously, if you're using 68% versus 70%. So this is just really quick. This is a volume profile. It's a 30-minute chart in E-minis. It's set at 70%. You can see right here, value area percent. And let's just sort of compare them really quick. I'll just take a quick screenshot here. Again, doesn't need to be too fancy. And I'm going to change it to 68%. Okay. Now, there may be, some minute differences, but overall, it's going to be about the same. So this is now set at 68%. Where's my snapshot? Here it is. It's on this other screen. Let me just expand this a bit more. So this little one here, picture in picture, is 70%. This is 68%, the big screen. So you can see it's more or less about the same. Just really quick, 43.89, 43.89, 43.99, spot 75, still the same, 7.99, spot 75, 95 and a half, 95 and a half, 05 and a quarter, 05 and a quarter, 04 and 3/4, 04 and 3/4, 9 and a half, 89 and a half, or 95 and a half. Now it's 89 and a half, 89 and a half, 97 and a quarter here on the 68% chart. Here it's 96, spot 75, so 2-tick difference. 00 and a quarter, 00 and a quarter. 85 and a half here is showing 85. 90 and 3/4, 90 and 3/4. So more or less it's the same, except you got here's a half a point, 2 ticks, and over here is 2-tick difference. Now when you go to smaller time frames, call it 5 minutes, you are going to get more difference because there's less volume trading. Now what do I prefer? I prefer 70%. I think 70% is fine. For me, if you're looking at volume, right, you sort of want to grab as much volume as possible and determine where these value areas are. So, for example, right, I have my footprint chart set to 70%. Right here, value area in percent. And it provides, and to be honest, if most of the time, right, even if I was using 68%, it's going to be a difference of, like I said, 1 tick or maybe 2 ticks. I'm still looking at the exact same things, right? I'm looking for those value areas that are not retested in the next bar to see if they're going to be retested, right? That's going to be my support and resistance areas, like right here, right here, right? I like to see how the market comes back and trades into these areas here, right? I see my value area here, and we come back in, I see some aggressive buying come in. That's what I like to see when we retest a value area. Right, here's a value area it's not traded back into. And let me just say that because one of those questions was, what do I look for in trading value areas? I look for those value areas that is not retested immediately. By immediately, I mean in the next bar, whether it's, this is a 60-second chart, or basically a 1-minute chart. If I was looking at, I'm not going to do that, but if I was looking at a 5-minute chart, right, I would look at the same things. A second to come up here. It's Saturday, so I'm recording this video, so data is just a little bit slow on Saturdays. I'm looking for those big value areas that are not tested back into, right? Here, right? It's bullish, right? So I'm looking for bullish. If something like this, right? This is a bearish value area. It's a red color. That's why we color our value areas. You don't need to, but if I have this value area, right? If I'm looking at this market, this one has me excited. Why? Because I know value has been overlapping here for 1, 2, 3, 4, 5 bars, even here 6. I'm not going to chain these all together, but more or less it's right in here over these 4 bars. And I see this value area. It's red. It's a bearish sign to me because it's red, right? I see red. I think the market should go down. But in this case, the bar closed above the value area. It's a red candle, but we closed above. So in this bar, it's actually rejecting value. Then the next bar opens, we just hit the value area high, 1 tick above, doesn't go inside that value area, and then it runs to the upside. This is actually a bullish setup for me, even though it's a red candle down. The fact that we're closed above the value area and we're trading above the value area in the next bar and don't trade back into it, it sort of goes into that bucket of what you expect to happen doesn't happen, but the opposite happens. That's your opportunity, right? Everyone's expecting. It's sort of like, not to use a gambling reference, but sometimes you have such a big odds-on favorite to win that the best bet is not to bet the horse that's 1 to odds-on favorite 1 to 20. You bet $2 to win 5 cents. What you want to do is you want to take a shot on those other horses in the race that are 20 to 1, 30 to 1, 40 to 1. Because look how the market ripped up to the upside, right? Sometimes it's not the clear, obvious favorite that you expect to win. Anything could happen in a horse race, right? Jockey could fall off or something. That's happened on these horses that are odds on. But what you're expecting, right, is that green candle with the big value area that's not retested in the next one, and for the market to rip, right? If you have a red value area, the market's trading below it, and we go back up to test it, and then we come off again, that's your trade to the downside, just as this one here is your trade to the upside. Okay, and that's on a 5-minute chart. If you're looking at a 10-range chart, now a 10-range chart, right, on E-minis, you do get a bit more, in my opinion, untested value areas. But again, I'd still look at them same, just sort of go back here. When you start seeing untested value area, right, this trend is heading down, right? Just as untested value area, start working your way up, that's your trade. Okay. And with range-based charts, you tend to get a bit more, in my opinion, abandoned value areas or value areas that aren't retested right away. If you were to look at, I don't know, volume, we'll call it a 5,000 volume chart, sort of the same thing. Okay, and let's just sort of give it a second to come up here. Right here, here, here. Right? Bearish here, bullish here, bullish here. And again, if doesn't matter what market you're trading, right? Say I was trading a, gosh, I don't know. Let's just pull up Jap yen, and well, this is a 5,000 volume chart. I wouldn't use a 5,000 volume chart on Jap yen, but you can see the same things. I'm looking for those value areas that aren't retested back into, right? If I was using, I don't know, a 100 tick chart, I don't know, I'm just making that up there, but I'd still be looking for the same thing, the value areas that aren't traded back into, here, here, right? That's a 100 tick chart. Even if I was on a 5-minute chart on Jap yen, same thing, right? Be looking for those value areas. And then again, once it goes back in and tests those, I still want to watch how the market reacts to it. Is it accepting it or is it rejecting it? Because if it's rejecting it, I'm going to look for the move away. And then if I'm looking for the rejection, what am I looking at? Well, I'm looking at the order flow. I'm looking at the, what the volume is taking place there. Is there any prominent point of controls? What's the delta doing, right? We're testing it, coming back in here. Actually, it's strong. Then it weakens, and it's negative. In this case, it just went sideways. But I'm going through the steps of what I know about order flow, how I'm expecting the market to react when it comes into value, just as I would do it if the market is coming into support or resistance, or coming into the high of the day or the low of the day. All right, you're going to be looking at the same things when you're coming back into value. All right, so I hope that clears up, or not clears up, but helps you understand how I look at the value areas in relation to order flow. So if you found this video helpful for your understanding of order flow, let me know. Put some comments below if it needs some clarification. And if you haven't already, be sure to subscribe to the channel. So thanks for watching and being a part of my order flow community. Your support is appreciated, and I'll see you guys on the next video. Bye-bye.